Welcome to another episode of Breaking Down the Charts the Market Titans Way, and you already know I'm your boy DeMark, and today we're looking at US30. So I'm going to show you guys how to really draw your supply and demand zones or your support and resistance levels, right? Now, a lot of people use these terms interchangeably, but remember, support and resistance is just simply referring to the levels above the chart, or level above price, or the levels below price, right? Where the big boys interact with. Now, the psychology behind these levels are known as supply and demand. So as you can clearly see, we're on the monthly time frame for US30. And the reason why we look at the monthly time frame is because the big boys who move the market, such as the large banks, governments, institutions, the big hedge funds, these big players trade on the higher time frames. So if you look at the monthly time frame right here, you can clearly see that we're in a moving uptrend. And how do we know that we're in a moving uptrend? Because we have clear higher highs and higher lows, right? That's the trait of an uptrend, higher highs and higher lows. Now we can clearly see that we have areas where price came up, it hits, and then it rolls over or it reverses. Now these areas above price, where price hits, are known as resistance levels, right? Now, why it's resistance? Think about it like if you have a ceiling and you bounce a ball. If you bounce that ball, it's gonna hit the ceiling, and then what? The ceiling is gonna resist it from breaking through, right? Now, this level has to be above price, and we can draw this in using our rectangular tool right here. So we have this level of resistance we're drawing. And the reason why I draw these levels with a rectangular tool is because I want to treat everything as a general area, because the market is imperfect. That's one thing that you have to realize. We can't use lines. Well, you can, but you still have to use that line as a general area because it's an imperfect market and we have buyers and sellers that are changing each and every day. So we don't use any specific points. That's one thing I want you guys to always keep in mind, right? So here you can clearly see that we have one touch point, and if you look to the right, now this area, which is resistance, is now acting as support. Now the support areas are areas below price. So you can see the price came up here, it was resisted by this area and it rolled over, then price came back and broke through the resistance. So by price breaking through your resistance, now price is now above that area that it broke through. Now since price broke through, guess what happened to that previous resistance? It turned to support. Now, if you look at support as a floor, right? If you should bounce a ball, it's gonna bounce off the floor and then it's gonna do what? Go up. Same thing, if you're walking on the floor is acting as support for you. That's the whole theory behind resistance and support, right? Making things easy, we don't wanna complicate anything. So support is always below price, resistance is always above price. And as you can see, we can clearly identify all the resistance levels and support levels right here. So let's draw them in together. We can clearly identify this resistance level right here, and we can draw this in. And you can clearly see that we also reacted to the level as support right here as well, right? We can also see that we have another level here, so we can draw it in. We want to make sure that we're not trying to force any levels. We want them to be extremely obvious to your naked eyes, right? So you can clearly see that we have one right here as well, and we're going to draw that in. Simple and easy. All right, here we go. So you can clearly see that this same level acted as resistance and support as well. So those are like the main levels that I would be looking at right now in terms of on the monthly. We can also see that we have a little level right here as well. We can draw it in, but on the weekly time frame, once we drop down to a lower time frame, we'll be able to see more swings in price because each candlestick on this time frame represents 1 month in time. So we can draw this in just because, but we're going to be able to see it better on the weekly time frame. So here we go. Boom. Now, the reason why we draw the levels like this and we use both the body and the wicks of the candles is because we want to get the best trajectory, or we want to get the most touch points, right? We want to make sure that we're not leaving anything out while we're not also forcing anything. So you can clearly see that these are the levels that I'll be interested in. Since price is all the way above here, you know, price is going to take a very long time to come back down to these levels to retest them, but we're just drawing them just because we want to see what the levels are looking like. We can clearly see that there are more levels down here, but like I said before, price is going to take a very long time if it does come back down here, right? So we're going to just focus on these levels closest to price. Now let's drop down to the weekly time frame. And on the weekly, we can still see the same monthly levels that we drew in initially. You can see that we have them here. And now we can also see more levels. Now the reason why we're seeing more levels on the weekly is because we have more candlesticks, right? You have 4 weeks in a month, so you're gonna have way more candles that are forming more levels, more support and resistance levels. So let's see if we can identify any more levels on this chart right here. At the top right here, we can clearly see that we have this level of resistance, right? We have our monthly level drawn in, but now we can see that price broke through a bit more and we have this resistance level. So we can draw this in, and then we can also give it a different color just to prevent confusion. So we're gonna make this one green. All right, now this is a weekly level of resistance. And now we can clearly see that price is above the level. We can also look down and we can see that we have some minor levels right here. We have a level of support, same level right here. We have another one right here, but we don't have to draw that in because like I said, price is all the way up here. So we're just gonna focus on these levels that are closest to price. Now you can still see that we're in that moving uptrend, clear higher highs and higher lows, right? And now you can see that for last week, we closed with this bearish rejection candle at the highest price point in recent times. Now, we can drop down to our daily time frame to see what this is looking like. Obviously, we're expecting to see more swings in price, showing us more potential support or resistance levels, right? We want to make everything simple. We don't want to complicate anything when it comes to the charts. So as expected on the daily, we can also see more support and resistance levels, and we're going to draw them in as well. So we know that based on color, this brown area represents the monthly level. This green one represents the weekly level, and now we're going to draw in our daily levels, right? So as you can clearly see right here, we have a touch point, we have one right here, and we have some over this point. So we can basically see that this area has some type of rejection going on, right? So we're going to start off by drawing in from the resistance levels and then extend it all the way to the right to see where it's acting as potential support. So we're going to use our same rectangular tool and we're going to draw something like this. Now we don't want the areas too wide, but we still want to get as many rejections as possible. You can clearly see we have one right here, we have this part, we have this part to the right. Now the reason why I didn't extend this all the way up is because this can be seen as a breakout, right? And a breakout is just simply referring to price breaking through this level slightly, but then it didn't follow through, right? It didn't follow through with the buyers. It's still reversed. And that's something that tells us that, hey, this area is still powerful. It does not invalidate the level because we have a slight breakthrough. And that's why it comes back down to where I tell you guys that you have to treat everything as a general area. Now, with support and resistance, you also have to qualify the levels. They have several traits to determine the strength of the levels, right? Now, let's just finish drawing them in and then we can go into all the different traits. Now we can clearly see that we have this resistance level drawn in and it's acting as support as well. We're going to change the color and change this one to blue. There you go, that's a daily level. Now we also have this resistance level that we can draw in as well. Let's just do that very quickly, incorporating some of the wicks and some of the bodies. And then we're gonna draw this one in at the top. All right, cool. And those are your levels. So these are the daily levels that we're looking at. We can see that we're still in this moving uptrend. And now we're rejecting this area of previous resistance, turn to support, and price is potentially on its way to this next level, right? Now on the chart, you can clearly see that this is the highest price point in recent times. And now we're gonna go into the traits of support and resistance levels, right? Now we have several traits that we look at. Well, you might find several other traits out there, but the main ones that we look at are one, the swing highs and the swing lows, right? Now the swing highs refer to the highest price point in recent times. And as you can see right here, price came up, hits, and then it rolled over, forming an area of resistance. Now, if price should come back all the way up to this previous resistance and then give us some type of rejection, aka price action, then the potential for price to move away from this level with a massive momentum or a large distance is extremely high because it's a swing high, right? Another trait that we like to look at is the level obvious to your eyes? Now, if we look at the chart without trying to force anything, we can see that we have certain areas. When price comes up, it hits and then it reverses, forming an area of resistance. Now, these levels are extremely obvious to your naked eyes. Now, that's another trait. And then another one that we look at is the area or is the level acting as both support and resistance. Now, with several of these levels that we're drawn in from the monthly all the way down to the daily, we can see that here, price is acting as resistance. To the right, it's acting as support. If you look at the previous level below this, you can see that price is acting as resistance and then price is acting as support. If you look all the way back, we can see that price is acting as resistance and now price is acting as support. with a small fake out, right? So you have several other trades that we can look at as well. Multiple rejections, is the move away extremely huge from the distance, stuff like that. So we just want to make sure that we qualify these levels, and none of these levels are equal to each other, because like I said, you're dealing with a market with buyers and sellers. You're not going to see the same thing that you saw yesterday, because we have different people, different psychology, different actions taking place in the market. But this is one of the main things that you need to understand when it comes down to trading. This is foundation. You have to learn how to draw your support and resistance levels. If you can't do that, you're skipping the foundation, and then you're just going to end up in trouble, right? So make sure you learn how to draw your levels, and this is applicable on all assets. I know we're looking at US30 right here, but it's the same thing for gold. It's the same thing for any stock, any equity, right? It's the same thing for commodities, crypto, futures, you name it. As long as it has a chart, you have to look at the support and resistance levels and draw them in. Why? Because those levels are where the big boys trade from. The big banks, the governments, the institutions, the people that are trading trillions of dollars every day. They move the markets, and we just follow their footprint. And how do we follow their footprint? By looking at the levels that they're looking to take action. And those levels are the support and resistance levels. All right? Now, that's how you do it. If you guys enjoy the content, always remember to like, share, and subscribe, and turn your notification bell on. I'll see you guys in the next episode.